I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
The FTX fallout, it grows, with Genesis as the latest concern in a worldwide crypto liquidity crunch. More on how the fall of FTX will reshape crypto as we know it.
Plus, TikTok's Project Texas. That's the company's plan to isolate US user data in partnership with Oracle, a project that the CEO says is expensive and unprecedented.
And an exclusive conversation for you about telehealth with the CEO of Cerebral, which has come under scrutiny for prescribing 2 patients with history of substance abuse. A serious conversation to be had, Ed, but first we check in on those markets. And it was a down day. The volatility is going to be prevalent in the macro arena. When on one day we had, of course, the PPI, the idea that inflation is peaking. The next day we're followed by good news being bad news for the markets. The retail sales looking too strong for the market to digest. They're worrying, therefore, about the Federal Reserve. And we had got some Fed speak, a number coming, of course, in terms of their focus on hikes that still have to come. We hear it from John Williams over here at the New York Fed, for example. The S&P, 68% of all the members of the S&P 500 falling on the day. We've got the NASDAQ off by 1.5% as, of course, we expect rates to rise. That has a big impact on some of those growthier names. Bitcoin, I shine a light on 16,500 is about where we trade. It was down on the previous day of trade, of course, this being as we worry about the contagion effects. More on that in a moment. Let's flip it up, though, because right here, right now, we think about chip stocks. We think about the earnings that you're going to digest, Ed. We look at the stocks overall. The index was down more than 4% on the day, really after Micron came forward with its own concerns about the amount of demand just being sapped from that market, Ed.
Yeah, Micron, very important. Earnings important too. More of them crossing after the bell this Wednesday. Cisco, really interesting. The kind of headline that makes you giggle, but the CEO saying demand did not drop off a cliff, and actually quite the opposite. There's evidence that government spending, corporate spending, really boosting Cisco, that gave a pretty bullish forecast for revenue in the fourth quarter. Nvidia as well, beating expectations, particularly data center in that third quarter. Remember, it has taken a hit from China, where US technology export curbs have hurt certain products, but they said sales of other chips offset that. You're completely right. The Micron story in Wednesday's main session was a really big story. The company saying that they're cutting production of DRAM and NAND chips because of the weakening outlook for fiscal 23 and the demand kind of dropping off during that session. The other big story of the day was Target. I know this is not technically a tech stock, Caroline, but the reason I'm paying attention is that we are in the last 3 months of this year. It's the holiday shopping season. Target taking a big hit to profit and saying that sales are going to drop in the final 3 months of this year for the first time in 5 years. Really worrying signs for the likes of Amazon and other e-commerce names. Tesla under pressure as Elon Musk takes the stand and says all his focus right now is on Twitter, not Tesla. That stock has been under pressure for some time. And I leave Micron and Nvidia on there. That was Nvidia's performance during the main session, but there was some spillover from what Micron had to say to the rest of the chip sector as well, as you know.
So right, Ed. And let's dig a little bit deeper into Nvidia, because it has just reported, and revenue was a beat. But of course, that comes after the really concerning news out of Micron that sent shockwaves through the chip sector as it's expecting a slowdown in demand. Let's try and pull apart these differing views. Debbie Wu joins us now from Bloomberg. And Debbie, with Nvidia, yes, they beat. But boy, it was still a drop in revenue. Boy, had it just been that market analysts had expected and lowered their guidance so far that they managed to overcome those low hurdles.
Excuse me. So yes, so today we've got sort of like mixed news from Nvidia and Micron, with Micron saying that the outlook for 2023 has weakened. So that suggests like the a slump in demand for PCs is still ongoing. But this is also partly reflected in Nvidia's announcement that demand for its graphic processors are also somewhat weak. Although Nvidia did say that demand for its data center products are propping up its sales. And so while its revenue has declined 17% year over year, it does still neatly beat analyst estimates.
Debbie, China is a big part of this story, right? Nvidia said a $400 million hit from the US technology expert curbs, but there were some bright spots in the earnings report that just happened. What did they say?
So Nvidia said that its sales into the Chinese market, the other products of its demand in the Chinese market it is going to offset the $400 million impact from the U.S. export control rules.
Overall, Debbie, are we expecting cliff falling here? We just heard from Cisco, of course, different part of the business, but really saying demand didn't fall off a cliff here. With NVIDIA, did it? Have we just expected that the market would be slowing so vigorously in PCs? And when you look at Micron, is that more of the read that we need to be taking, that we are back to boom and bust when it comes to chip cycles?
I think it's still a bit difficult to say because the picture is a little bit mixed. So there's pockets of weaknesses in the market. So in PCs and probably a little bit in demand for gadgets like smartphones. But at the same time, you can see like probably big companies like Microsoft or Amazon, they are still continue to spend on their data center offerings or their artificial intelligence offerings. So there's still some growth opportunities in these sectors.
All right, Bloomberg's Debbie Wu, thank you very much. Now, the fallout from the rapid collapse of FTX is spreading across the crypto world, ensnaring the billionaire Winklevoss twins through a liquidity squeeze at their lending partner, Genesis. How did we get here? Bloomberg's Annie Massa is here with the Bloomberg Big Take on this story. Annie, how did we get here? What is happening with Genesis? What is the latest?
The latest is that we're seeing the fallout of the FTX bankruptcy that was announced last week. So one of the biggest fears has been how far the contagion will spread from that bankruptcy. And we're already starting to feel the effects. BlockFi is said to be heading towards bankruptcy itself. Genesis, as you mentioned, has stopped withdrawals from its earn program, its yield program, and Gemini's in a similar position. So what we're really seeing is that spread of the effects of the FTX implosion last week.
Notable Kraken Exchange saying their total exposure to other crypto businesses is only about $1 million, and actually some referencing the price of Bitcoin today, showing actually some resilience here and showing that actually a lot of this has now been priced in. From your perspective, Annie, how much more of the onion is there to peel back? I think what's been so fascinating about your reporting is just the extraordinary nature with which FTX, yes, of course, penetrated the world of crypto, but also traditional finance, TradFi as people have been calling it, particularly in the world of futures.
That's right. So the story that we put out today was really about how deeply FTX penetrated the typical financial markets. And it did that just through acquisitions, a pretty simple strategy for a company that's throwing off all kinds of cash, or so it seems. So FTX, what happened was last year FTX bought this this derivatives exchange called LedgerX. And it had this proposal that was going to change derivatives clearing. And some people in the industry really pushed back. They said that's going to add a lot of risk the way that FTX had laid it out, which would have given them a lot more unilateral authority, basically, on the back end. And some industry veterans said, this isn't a great idea. We don't like this. Now, the proposal wasn't approved, but they came scarily close to really being even further embedded into the financial machinery of the rest of more traditional financial markets. And
Annie, we're just seeing on our screen.
Of his ambition, too. Sorry.
Annie, we're just seeing on our screen all of the chaos, frankly, of the last 7 days. It's astonishing to relive it because it has been so quick. We've learned a lot about SBF. We've learned a lot about FTX's role in the system. I feel like I don't know much about FTX. How did FTX run itself as a business?
The way that FTX ran itself as a business is kind of surprising a lot of people. SBF was known for really coming out and saying that they had very sophisticated systems to manage risk, but at the same time, what's really kind of exploded into the public eye in the past week is that there was really no division at all between his proprietary trading firm, basically his hedge fund or family office, Alameda, and this exchange, FTX, that he was running, which took in customer deposits. So basically you have this commingling of funds that anyone in traditional financial markets would say is a huge, huge red flag and can lead to all kinds of inherent risks of implosions. And that's exactly what we've seen happening with, that's exactly what we saw happening with FTX. And now the chaos is kind of spreading.
Annie, there's a healthy dose of schadenfreude going on at the moment, particularly perhaps amongst traditional finance. You were at the FIA conference in Chicago, which had to scrub out the name of one of its lead benefactors, which of course was going to be FTX. How much shock is there that, yes, retail investors are left carrying the bag, and that's so painful, that's always the case, but so-called sophisticated investors, old guard of traditional finance, were just so duped by this individual?
It's a good point. We were looking around the FIA conference, and as you said, FIA was supposed to be sponsored, at least in part, by FTX. And it shows how easy it really is to embed with the rest of the financial industry. I think part of what's really emerging about SBF is he had this demeanor that he was totally open. He was a totally open book. He was totally honest with people and a totally open book, and there to answer questions and mix and mingle with the rest of the industry. And I mean, what's coming to light is that it was a very different picture, and he wasn't telling the truth about how his company operated. But just the sheer exposure to traditional finance and the people who mind the market plumbing shows you that he conned a lot of people who are very sophisticated, but not all. There are plenty who pushed back stridently against, for example, that futures idea.
Your deep dive in this story has been remarkable. We thank you so much. A story over the weekend was a must-read, as is this latest big take on the Bloomberg terminal. Bloomberg's Annie Massa, we thank her for it. Meanwhile, coming up, according to the FBI, China's government could use TikTok to control millions of users' data or their software. We have the TikTok CEO's response. This is Bloomberg. TikTok CEO Shou Chew says Project Texas will bolster security in the US by ring-fencing user data through a partnership with Oracle. In a conversation with Bloomberg's Reto Gregori at the Bloomberg New Economy Forum in Singapore, he addressed national security concerns about the Chinese-owned video app raised by the FBI.
For many tech companies, including ourselves, one of the largest teams that you will have is your trust and safety team, which is not only the people who design the policies around community guidelines, but the people who complement the machines in terms of content moderation and protecting the platform and making sure that the content is very safe. Now, that is an investment that I think is not definitely worthwhile if you want to keep the platform a very safe platform.
How many people do you have in content moderation?
It's in the tens of thousands.
Obviously, you're in a pretty unique position. You have a China-based owner, ByteDance. You have a very big business in America. There's a lot to navigate. The previous administration tried to force your sale. Now you have Marco Rubio and Mike Gallagher. They want to ban you. Yesterday, FBI Director Chris Wray says he's extremely concerned about your app, and all this comes in the middle of a security review in America. Are you a little bit nervous about your future?
The first thing I would say to all the reports is that we clearly pay a lot of attention to it. And national security concerns are concerns that we take extremely seriously. As we have disclosed in the past, we have had discussions with the US government, mainly through CFIUS. And if you saw the FBI director's comments this morning, Singapore time, he made comments that they are working through that process as well. And I'm very confident, because it's confidential, so I cannot talk about the details, but I'm very confident that through the detailed discussions that we're going to have, we will come up with a solution that will reasonably address the national security concerns that the policymakers have.
Let's continue the conversation with Bloomberg's tech editor, Sarah Fryer. I actually want to go back to basics, though, Sarah. What is Project Texas, and why even do a Project Texas?
Well, it's a way for TikTok to remain in operation in the U.S. Now, remember, under the Trump administration, they were going to be banned. They were going to be forced to be sold to a U.S. company. All of that is now under a less urgent review, but still a pretty significant review. Can we keep TikTok available to U.S. consumers? How do we do that? What kind of guidelines do we have to put around it? How do we really make sure that data is protected so that only those in the U.S. can see it? What was interesting to me from his comments is it sounds like it's not going to be based on nationality. It's going to be based on location.
Yeah, I like that focus there, really talking about no consumer internet company organizes access to data by nationality, really talking about geographic focus to ensure security. That's going to be a tall order. Have we heard much in terms of the partnership between Oracle and TikTok?
Well, we really haven't. I think that Oracle wants to help, but it's unclear, based on the experts we've talked to, that it would even be possible to fully protect all that data and do it not just with the data going forward, but from the data in the past, right? TikTok already has many millions, if not billions, of users who are creating data now that is going to be entangled with everything that's happening back in China, engineers over in their headquarters there. So I think that it's going to be a pretty impossible task. And if they find it to be impossible, could TikTok still be banned? Could they still be limited in how they can reach U.S. consumers and advertisers? I mean, what could be limited about their growth in the U.S.? I think it's good that they're confident about an agreement that they're going to reach. I think that the U.S. government would like to continue to have TikTok available to U.S. consumers, but if they see national security concerns, it's going to be very difficult.
Sarah, we continue to ask our audience what they think about all of this. I think I'm always shocked by how big TikTok is in the United States and all around the world. But we asked our audience how concerned are they about their data in particular, or TikTok's control of their data. Twitter poll, this is the outcome. 60% of respondents said yes, we're concerned about TikTok's control of US user data. What has the response been from TikTok's user base and perhaps from political parties within the United States as well?
I think people are concerned about TikTok having access to their data, just like they're concerned about Facebook having access, about Twitter having access. I think data privacy has become one of the top issues for consumers over the last few years after all of the different privacy lapses from consumer apps. So I'm not that surprised that that's how people responded to the poll. What I think might be a little bit more difficult for U.S. consumers to understand is, like, what are they meant to do about it, right? TikTok has become a place for people to go and blow off some steam, watch some funny videos, be entertained. I know
True.
That's the case for me. And so if they are told, like, you know, there may be some very serious potential national security concerns with this data, what's that going to change about consumer behavior? And how does that change what U.S. advertisers do with their money? Because ultimately people want to go where the audience is, and it's something that, like, we've seen over and over. People are worried about their data, but they're not sure how they're going to change their behavior in response to that.
Yeah, and that sort of ship has sailed in a little bit. I'm interested that, actually, talking of that's how their money is made, it's advertising. And actually, Sarah, we've seen that even the success of TikTok hasn't been immune to some of the downdraft in the economy at the moment. We know that they've been slashing their own outlook for how much money they're going to be raking in from advertising. What was it, 12 billion down to 10 billion? How bleak is the situation out there right now for some of the key companies you speak with?
Well, I think it's bleak for TikTok, especially if they are to be restricted by the U.S. in some way. I think that is their biggest existential threat right now. The advertising environment is one thing, but listen, they are a new entrant, a new option in a market that Meta and Twitter and Google are already seeing struggles in, and they may actually get some of the revenue that advertisers are trying to spend somewhere other than Twitter in this moment of chaos. We've seen a lot of major advertisers say they're going to pause their budgets, that they're going to wait and see what happens with Elon Musk's takeover.
Quick question. Is it looking good for TikTok in North America, at least?
You know, I think banning TikTok would be extremely unpopular for consumers, and so I think they'd like to find a solution, and I think that the government has an interest in keeping this an option for U.S. consumers if they can find a way to do it without breaching national security concerns.
All right, Bloomberg's Sarah Fryer with the latest on TikTok. Thank you. Coming up, Elon Musk testifies over his $55 billion pay package trial in Delaware. More details on what came out of it next. This is Bloomberg. Time now for Talking Tech. And the subject today, Elon Musk's huge Tesla payday. Musk says he had no role in setting his 2018 compensation worth $55 billion as he took the stand in a Delaware trial. A judge will decide if he should give it back. The Moonshot Award is in the form of stock options with conditions attached and was the biggest payout in US corporate history, way more than big tech names like Amazon's Andy Jassy or Apple's Tim Cook were paid. The lawsuit claims the reward was excessive for a CEO leading multiple companies and should be given back to Tesla. The suit argued Tesla's board lacked independence when agreeing to it. In his testimony, Musk says he did not know about the internal reward process. Musk says most of his time has been spent running Tesla, with less time spent at SpaceX and Boring Co. in recent years. But right now, Musk says he's focused on reorganizing Twitter. Elon says he barely takes time off for vacations, and he calls them, quote, an email with a view. Caroline.
An email with a view. It's kind of depressing. I tell you what really caught my eye, though. And yes, of course, we all mull over how much Elon Musk is being paid for the various jobs that he currently has.
Right.
But the Twitter one, and in particular, the focus on whether or not a blue check means anything, whether or not you're verified. We know that's being pushed into the long grass a little bit till November the 29th. This hashtag RIP Jimmy Fallon. Did you see it, Ed?
I saw it. I think I confirmed that Jimmy Fallon is still with us.
Yes.
That's my understanding.
And he wanted it corrected. He's still with us. He was shocked and horrified that basically, from what I understand, the reporting seems to be going that someone took advantage of these latest changes in terms of who's bona fide and who's not, and changed up the Jimmy Fallon profile with just a letter swap, and then mentioned that he might have passed. And the whole world was set alight with worrying about Jimmy Fallon. And then, of course, it became a meme, and then it became a joke. But ultimately, this is the power of Twitter, and ultimately it not working as it should. I am double-checking, triple-checking everything on this social media platform now.
And the serious side is Elon Musk did respond and say, fix what? Like, what are you talking about? But later tagged community notes, which is what he's trying to push, right? This community-sourced fix to Twitter's inaccuracies.
It is one that we continue to keep abreast of, keep watching the fallout. And indeed, I mean, there's plenty more that's going to be going viral, and we will be on top of it. Meanwhile, though, coming up, Ed, we are learning, of course, about some of the shortcomings when it comes to telehealth, which promised expansive healthcare for anyone with an internet connection. But did it have the right checks and balances in place? We discuss. This is Bloomberg. Slowly but surely, we're learning more about some of the shortcomings of online medical treatment after the COVID pandemic spurred a boom in telehealth demand. Now, Cerebral was at one point the fastest growing provider of online mental health care, but perhaps lapses in due diligence that led to overdoses, to deaths. That was according to a recent Bloomberg investigation. Ultimately, Cerebral was potentially ill-equipped to treat some of the most vulnerable patients, those who don't disclose their substance use disorders. What followed is a federal investigation, the ouster of the founding CEO, Carl Robertson, and the promotion of David Moe, a Harvard-educated psychiatrist who is now the CEO. I'm very pleased to say he's joining me now for an exclusive conversation to discuss the past, the present, the future, alongside our own Bloomberg investigative reporter, Caleb Melby. And David, thank you for your time today. And this is emotive, and I want to talk about a complex issue that is mental health. It's complicated whether you're bricks and mortar. It is complicated whether you are, of course, a telehealth provider as well. But ultimately, these are complicated conditions that you're trying to treat and treat overall. How are you now looking to have people talk about their substance disorders? How are you handling cases that have affected you in the past where we've seen overdoses, deaths, according to internal company records and indeed according to interviews?
Well, first of all, thanks for having me. Just to give a little bit of context here, mental health is really broken in the US. If you look at the average wait times to find a psychiatrist, it ranges 2 to 3 months. And the vast majority of mental health professionals don't measure any quality outcomes whatsoever. And so the current system really is broken. Most counties in the country do not have a single psychiatrist. And so what we're doing with telehealth at Cerebral is to provide people with care within a couple of days, 2 to 3 days on average, and to measure clinical outcomes very, very carefully. We have a very robust program where we do screen for substance use disorders, just like brick and mortar clinics. And we have access to urine tox screens to make sure that we can verify that patients are getting the care that they need. And most importantly, we do have the outcome measures to show that the vast majority of our patients do much better clinically after just a few months with Cerebral.
The lessons you learned, the fact that you stopped prescribing controlled substances, Adderall, Ritalin, for example, after, of course, a grand jury did indeed subpoena from the US Attorney's Office, you received a grand jury subpoena. Are you starting to see changes? Do you think overall that you've learned lessons in terms of the way in which you prescribe and who prescribes?
So we stopped prescribing controlled substances because we've understood that the law, the Ryan-Haight Act that temporarily suspended the in-person requirement, will be coming back. And we wanted to responsibly be able to taper off our patients from those medications. We still do prescribe Suboxone for opioid use disorder, and that is a controlled substance because we heard that there may be an exception for Suboxone. So certainly I've been confident about our clinical programs, which are very robust and very clinically driven. We have clinical guidelines that are used by millions of doctors across the world as the North Star for our clinicians. And we have multiple support systems for our clinicians. For example, at any point within minutes, our clinicians can get in touch with a second opinion psychiatrist to run by a complex case. For example, we have unlimited visits for our patients when it comes to the prescribing. And we, again, measure these outcomes and give those data back to our clinicians so they can continue to provide good, high-quality care.
Thanks for joining us, David. You've been charting a new course as CEO since you took over that role in May. Of course, you were Chief Medical Officer for the company since February of 2021. A lot of the stuff we discuss in this story and other stories, be it concerns of nurse practitioners about prescribing of controlled substances and otherwise, you were not in the chief executive's chair, but you were the top medical officer for the company. As we look at some of the things that we talk about in this story and in previous stories, to what extent do you feel you bear responsibility for how things were managed during that period of time?
So again, I feel very confident in our clinical programs. When I came in, my mandate was to improve clinical quality and safety. And we set up some of the most robust clinical quality and safety teams of any telehealth company. For example, we have two dedicated teams, a clinical quality team and a clinical safety team, each run by a dedicated psychiatrist. And those teams have one mandate and one mandate only, which is to run quality efforts, run safety efforts. For example, we just launched a few months ago a suicide prevention program that basically proactively looks at the messages that we get from our patients. We get thousands of them every day, and some of them have suicidal content in them. Some of them say, I want to kill myself. I don't want to go on anymore. And we can detect that using machine learning and then proactively reach out to those patients within minutes, within 7 to 10 minutes. We don't care if it's 3 p.m. in the afternoon or if that's 3 a.m. in the morning. This service is available to all of our patients 24/7, and certainly we don't charge them extra for that. It's just the right thing to do. So this is just one example of how we're using data science and machine learning to make care much safer and much better relative to the standard of care today.
David, when we talked to you in advance of our story, you said, of course, that due to patient privacy rules, you couldn't comment on any individual patient cases. I do hope you've been able to read the story. Is this the sort of care that patients coming to Cerebral should be expecting to receive, the sorts of cases outlined in Bloomberg's most recent reporting?
Caleb, I've been very confident in our clinical programs from the very beginning. I've referred my close friends who use the service, and they've had positive testimonials for this. It's something that we really believe is above the standard of care.
Ultimately, this is a high-growth startup environment that Cerebral was in. And do you think that that's ultimately the right environment for telehealth, particularly for mental telehealth provision overall, David?
It's a good question. I'll give you a story, and this is emblematic. It's a sample of something that we see all the time. We see this patient who I'll call Bill, and he received his therapy appointment, and his therapist saw that he was in his pickup truck by the side of the road, and his therapist asked, well, why are you in your car? And Bill said, well, I'm not ready to tell my wife and my kids that I have really bad depression, and I don't make enough money to have a private office to take a telehealth visit. So I need you guys to meet me where I am, because I'm sick and tired of meeting you doctors where you are. That's what we're doing. Our mission here is to democratize access to high-quality mental health care, and we're reaching populations that historically have been completely cut off from the mental health system. So it's not that if they don't have us, they'll go to their next psychiatrist. They don't have anything else. So we really want to be there for those populations, and that's my focus going forward.
David, you told us that Cerebral has been diverting some of its marketing spending to clinical care and other things that support the mental health process. Throughout 2021 and some of early 2022, a big part of Cerebral's marketing efforts was the gymnast Simone Biles, who, of course, brought mental health care to the forefront of her own story when she stopped competing in the Olympics. Is that partnership still active?
Yeah, we really support Simone, and I have to say that her contribution to mental health is immeasurable. And it really is very significant. And it's not just her, it's what she's been able to show our patients. Some patients come to us and they very directly attribute their reaching out to seek care because of Simone. And it's not just Simone, it's her mother as well, who has been very, very supportive. We're very, very appreciative of the partnership that we've had with them.
David, you tell that story, anecdotal story about Bill, and you say he couldn't have got care anywhere else. But there are competitors out there. And when we look at your numbers, looking at Bloomberg Intelligence data, downloads of Cerebral have gone to 10,000 in October when they were up at about 78,000 in April. How do you recover from this? How do you recover your own valuation, for example, which I think we understand you slashed by about 95% on internal valuations?
So what I'll say is that we've made a conscious effort to decrease marketing so that we can grow sustainably. I'm very optimistic and confident in our business model going forward. The demand for high-quality mental health care grossly outstrips the supply, and we're seeing very positive signals in terms of our partnerships with large insurance companies and primary care clinics and other ways to get patients the care they need.
David, we want to thank you for your time today. Cerebral CEO, David Moe, and of course our Bloomberg investigative reporter, Caleb Melby. Thank you for joining us on it. Wishing you well, gentlemen. Meanwhile, coming up, the FTX contagion makes its way to the Winklevoss Gemini via its brokerage, Genesis, of course, a lending platform that they were, of course, bringing through that partnership. We'll discuss. This is Bloomberg.
FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
What should the industry do to survive and make itself better? My opinion is more collaboration.
Asset under management in the FTX is large, so it may actually hit the other bankruptcy. In the morning, there's actually one new report that BlockFi is a lending platform may actually file the bankruptcy, so it may actually continue a little bit.
I think it's quite contained right now, and the broader market is still seeing a lot of liquidity, and the authorities, I think, will be there to address any issues in crypto.
Some of the voices from Bloomberg's New Economy Forum in Singapore reacting to the crypto contagion. For more on the future of the industry, let's bring in Bloomberg's Sonali Basak, as well as Gauntlet CEO Tarun Chitra. Sonali, crypto contagion. Give us the latest reporting on what the fallout from FTX has spread to.
There are a few things, and whether this is directly tied to FTX or just larger issues in the industry tied to withdrawals and other things, you have now BlockFi, according to Bloomberg sources, saying that BlockFi could announce a bankruptcy filing within days. You have also that issue of withdrawals you see over at Genesis Global Capital, which is the lending arm that is associated with the Genesis family. Remember, Genesis is a huge counterparty in this business, so people are watching that very, very closely and announcing whether they've been exposed or not. You have Gemini Earn, which is tied to Gemini's lending business here, and that relationship has had Gemini's Earn business also pausing withdrawals. So again, a lot of questions here about how customers can get their money back, what withdrawals look like, and how far this contagion will spread not only now among FTX customers, but the customers of the companies I have named and other exchanges as well.
Taryn, let's bring you in here. First FTX, Genesis, you heard some other names from Shonali there. What is your reaction to this idea of contagion? What does a Genesis, for example, represent of what is happening in this industry?
Yeah, so I think in the last 2 years, we saw this extreme growth in centralized lenders. So these are lenders like Genesis, BlockFi, Celsius. And what they did is they gave sort of unsecured loans to market makers, for the most part, from the borrowing side, and then they took deposits from consumers or institutions in the case of Genesis. And during kind of the zero interest rate world, we saw an extension of credit to parties that otherwise were perhaps not really creditworthy, with very little collateral requirements at all. And this amount of uncollateralized lending on paper produced a huge number of profits for decentralized lenders. However, of course, as rates tightened, the centralized lenders were sort of unable to keep the capital that they needed to issue these loans. And the people who they'd sort of lent to had owned and gone extremely long cryptocurrencies, especially ones that crashed, such as Luna. And that led to this sort of extreme credit crunch that we're seeing right now. In a lot of ways, the centralized lenders started all of the problems, and I guess it's sort of fitting that they're sort of the end of the contagion.
Well, here, I mean, Tarun, how far does the contagion then go now that we have new firms that are saying that they're pausing withdrawals? It's unclear how far that goes and who all those counterparties might be.
Yeah, for sure. I think the interesting thing about the lending books for a lot of these lenders is the majority of the borrowers were market-making firms, more traditional market-making firms, sort of like the Jumps, GSRs, Jane Street, et cetera, as well as sort of these, Alameda type of market makers who went under. And I think the real question of contagion from here really boils down to how well did these centralized lenders choose the loan to values, like how much they lent relative to the collateral, and what collateral do their counterparts actually have? In the case of Alameda, we kind of saw a lot of, what I would call very similar to Enron's fall type of collateral, where there's collateral that's marked to billions of dollars whose real liquid market cap is $50 to $60 million versus being billions of dollars, and
so
that's the problem.
Tarun, I'm really curious here if we can kind of like look past what's happening day to day here and look forward 6 months into the future. Yeah. What does the industry look like?
I think the industry definitely moves towards decentralized finance quite a bit more. In decentralized finance, you could effectively think of it as customers can always withdraw, and they withdraw ahead of shareholders/token holders. The idea that withdrawals are prioritized over shareholders sort of ensures that you don't have these kind of credit crunches built into the system. Now, that means you're more collateralized, but clearly the under-collateralized and less collateralized parts of the system all blew up at the same time. And I think we're trending towards a more collateralized world in crypto, at least in probably the next 1 to 2 years, unless sort of rates go down again.
Tarun, if you look at the dislocations that are in the industry right now in certain assets, if you look at GBTC, if you look at the yields on staked Ether, if you look at, for example, the differential between Bitcoin futures and Bitcoin spot, if you look across the industry, what are the pricing dislocations that worry you?
Certainly GBTC is probably the largest worry, with the GBTC discount to fair value at around minus 40%. I suspect there's quite a bit of of a relation between the Genesis sort of halting and the GBTC premium blowing out. They're both sort of run by the same parent company, TCG, Digital Currency Group, and there's a lot of close relationships between them. For instance, Three Arrows Capital used GBTC as collateral with Genesis to borrow against it. And, obviously Genesis is now sitting on a 40% loss, as well as the borrowed assets are sort of gone. So I think the main question of the rest of the credit crisis is what collateral do people actually have? And in DeFi, everyone knows what collateral everyone has. And that's the difference.
All right, Bloomberg Sonali Basak there with Gauntlet CEO Tarun Chitra. Thank you. Coming up, after multiple delays, NASA's test mission to the moon is finally underway. There she goes. This is Bloomberg Liftoff.
We're going viral and we're going intergalactic. After years of delays, billions in extra costs, NASA's Artemis mission to the moon and back, it's underway. It's most powerful rocket in 50 years, and it's sending an uncrewed capsule skyward on a 25-day mission to orbit the moon and return safely back to Earth, and its multi-mission program, of course. It's focused on sending astronauts, including the first woman, the first person of color, back to the moon's surface by as early as 2025. Let's talk about this with Lauren Grush, covering all things space for us. Right there to see it take off in the middle of the night, basically. Lauren, what did you make of this step? I mean, it seems a long time coming.
Yes, I mean, for a space reporter like myself, you have to understand the real surreal nature of watching this rocket launch. I think I've been covering this rocket since I started reporting on space 8 years ago. But yes, it finally launched. There were some moments during the countdown where we were unsure if it was actually going to take off last night or actually this morning, but it finally did, and it was a sight to behold.
I felt what you felt, Lauren. I felt the rumble of the rocket go into Earth's atmosphere, right? I completely get what you're saying. There is a serious point to all of this, of course. There is a mission here. Talk to us about what Orion is going to be doing for the next 25 days, the capsule itself. I think we have a map of the mission that it's conducting.
Right. So first and foremost, this is a test flight, right? The main objective of Artemis 1 was to debut the massive new rocket, the Space Launch System, and the Orion crew capsule together on a flight and show that they can actually send a mission around the moon safely and return it home to Earth. So an hour and a half after launch this morning, I keep trying to say last night, but it was this morning, they conducted something known as a translunar injection burn, which sent it on its trajectory to the moon. So right now it's on its way to the moon, and soon in the next week or so, it will insert itself into lunar orbit. It'll stay there for about a week. Then it'll come back home and it'll attempt to splash down in the Pacific Ocean intact with its heat shield, reaching temperatures of up to 5,000 degrees Fahrenheit. And that's going to be a big test as well, because, you know, we can send people to space, but we got to take them home safely. And just to be clear, there was nobody on this flight. This was just a test to see that we could actually send this hardware into space safely.
Lauren, 30 seconds. Frustrating for many, Artemis 2, no matter what, won't go up for another couple of years.
Yes, that is kind of the downside of this program. It's going to take a lot between this mission and the next one. NASA is still targeting the first landing as early as 2025, but there's a lot of skepticism whether that's going to happen or not. So yes, there is a lot of time between these missions, some things that critics have been quick to point out. But, you know, that it was a fantastic sight, so I'll definitely be, you know, patiently waiting for the next one.
All right, Bloomberg's Lauren Grush, thank you. It's good to see you.
That does it for this edition of Bloomberg Technology. Thursday, of course, we're going to deep dive on those Cisco earnings that you were bringing us earlier. The CFO, Scott Herren, to talk earnings.
And don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and of course, as always, iHeartRadio. Caro, that's it for technology. This is Bloomberg.